Every business needs to understand revenue, costs, and profit. These three ideas show whether a business is making money or losing it. Revenue is the money a business earns from selling its goods or services. Every time a customer buys something, business receives revenue. To calculate revenue, multiply the selling price by the number of items sold. Price times quantity gives total revenue. Costs are the expenses a business must pay to operate. Some costs stay the same, like rent. These are fixed costs. Other costs change depending on how much the business produces, like raw materials. These are variable costs. Total costs are simply fixed costs plus variable costs. Add them together to find the full amount a business spends. Profit is what's left after a business pays all its costs. If revenue is higher than total costs, the business makes a profit. When costs are higher than revenue, the business makes a loss. When revenue is higher than costs, the business makes a profit. It's that simple. Imagine a student selling smoothies for £3 each. If they sell 50, revenue is £150. Their costs are £90 and their profit is £60. So a quick recap. Revenue is price times quantity. Costs are fixed plus variable. Profit is revenue minus costs. These basics help every business understand how well it's performing. That's revenue, costs and profit. Simple, clear and exam ready. Thanks for watching, and for more business studies content, don't forget to like and subscribe.